Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Monday, the 27th of October. And I'm starting off with Gulf Keystone, where in the recent past, looking on the bright side of the price action has not been a very successful or pleasurable strategy, but I feel rather obliged to report the latest, slightly more positive configuration that we have on the daily chart. This could be basically a bear trap rebound from below the floor of this falling June price channel. That's level with the 50-day moving average, sorry, the 10-day moving average at 50 pence. And the message at the moment is that while there is no end of day close back below the June line and the 10-day line, we could be looking for further recovery here for the shares after the probe towards 40 pence. Key level at the moment would probably be the August 61 pence floor. That is both the target and the resistance on any recovery the shares try and make now. Ideally, there would be now no breakdown back below 50 pence ahead of a rebound, which could be as great as 80 to 90 pence, which would take the shares back to the August resistance. Of course, you're risking around 5 pence at the moment to try and make 25 pence or more. So the risk reward is good, but obviously we should remember that the shares have been in a descending pattern for quite some time, and there's not really been any lasting recovery within that time, or at least the last few months, other than the odd squeeze to the upside as we saw in June or August. Moving along to IRG, which is Independent Resources. And here we see a stock which is quite encouraging from a technical perspective, on the basis that the overall pattern here since the unfilled gap to the downside in May has been that of a source of recovery, extended base for the shares, and it does now look as though they have enough momentum to try and go and return to fill that gap towards 6 pence made at the end of May. If you're cautious on the shares, maybe you'd wait for further price action on the upside, maybe a break of the initial October resistance, which was at 3.25 pence. But it does look as though enough decent work has been done here, and while there's no end of day close back below the 20-day moving average, currently at 2.38 pence, we should see the shares start to make progress towards 6 pence over the next 1 to 2 months, and possibly a bit more by the end of the year. The top of this broadening triangle from the beginning of the year is as high as 8 pence, which would be the best case scenario target for the end of 2014. Finishing off with a less dramatic chart, and that comes from Wessex Exploration. Here the shares are up a little today so far. Looks like we're bumping along the bottom of this triangle formation, which has been in place since April. The hope is that eventually this bubbling that we're seeing at the floor of the range will lead the shares up to this resistance line from the end of last year, as high as 1.2 pence. That's the target, while there's no sustained price action back below today's intraday floor and the April support line at 0.5 pence. So not risking too much in terms of this trade, but the possibility of a spike, as we saw in May, does leave a reasonable upside for those willing to take the risk on Wessex Exploration at the moment. That's it from me. More updates at spreadbetmagazine.com.